Yeah.
Welcome, everybody. See, we got people from all over the place.
Oh,
I see a bunch of folks from the Carolinas. I see some New Jerseyans. And that's just on my little first page of people. So, yeah, everybody say in the chat where you are from so that y'all can network with the folks who are close by you. And I am just gonna, since we only have an hour together, I am just going to introduce our speaker tonight and let him talk about the fascinating topic of bookkeeping. Oh, I'm sorry, was that my sarcastic voice?
I think so.
Well, I I obviously do not find it fascinating, but I do find it extraordinarily necessary. My life changed very much when I stopped only, having my how much money was in my bank account as my key performance indicator and actually understood how my properties were doing and whatnot. And it was actually this guy right here who initially set that up for me so that I could see what was happening in my business with the click of a button. So, for y'all who do not know him, this is Jerry Fink. He is a long time housing provider, big retailer, owns rentals, owns apartment buildings, uh, understands what we do, but actually came from a CPA background. He calls himself recovering CPA. I'm not sure how much he's recovering. I think he's recovering the way somebody in AA is recovering. Like he'll always truly be a CPA at heart, even if he is non-practicing. And since it is tax time, and since people are starting to say, "Oh my God, one of my goals last year was to get my bookkeeping straight so that this year I could hand my CPA something other than a Excel spreadsheet and a box of receipts," we thought this was a good time to hear from somebody who has walked in our shoes in terms of how books have to be kept for real estate investors. So, with that, I'd like to introduce Mr. Jerry Fink.
Okay. Well, thank you, Vina. Yeah, and if I remember, that was somewhere around 2006 that
It was
we
before it
set
was
up your
before the
books.
market crash. No, I think it might have
Yeah,
been like four.
or maybe it's been a minute, that's for sure. Yep. All right. Well, welcome everybody. And as Vina said, we're going to talk about the exciting topic of keeping your books and why it's so important and how we can do that a lot more efficiently. So, again, as Vina also said, we have people from all over the country. Primarily, these are all people who belong to RIAs, which are part of what we call the RMG group. But we also have people who are not part of RMG who are joining us tonight. So, welcome everyone. And I hope you find this evening very entertaining and educational. So, let's go ahead and get started. So again, a little bit about me. I got my bachelor's in accounting from Northern Kentucky University in 1977, so a minute ago. I am a CPA in Ohio, non-practicing, which means I am not actually doing any CPA work anymore, but still have the knowledge. I spent over 30 years in corporate America. I was an accountant, I was an accounting manager, I was a consultant, I've served as acting CFO for a few companies over the years. And in addition, I have over 45 years experience in just about every aspect of real estate. I took my first real estate class from Vina's dad in 1979. So that goes back a minute as well. My first rental property I bought in 1980 and have had some sort of real estate ever since then. I've been a full-time real estate investor since 2002 when everybody remembers Y2K, and the world actually did not come to an end. And I got laid off from three different software companies in 3 years. I said, enough is enough, and went into real estate full time. I'm the kid that built clubhouses in the backyard. So it goes all the way back to my first one. I believe I was 5 years old. So always had that interest in buildings. Um, QuickBooks Desktop, QuickBooks Online Implementation Consultant, and CFO to several local real estate investors. As I mentioned, I did get Venus started way back when, and my co-host, who I'll introduce here in just a minute, has kind of taken over that role from me, and that's been a few years now as well. So my co-host tonight is Anera Shell. She's also a CPA from since 1993. She's a tax accountant, does taxes as well as some bookkeeping for several local companies, trusts, doctors' offices, and all that sort of thing. She is the CFO for Cori, Oria, and we don't even know how many companies that Vina has because they are innumerable at this point. She enjoys cruising, so I thought this was interesting. She has Alaska and the Caribbean on her agenda here in the very near term. And she is a self-proclaimed crazy old cat lady. So please help me welcome Anira this evening as well. All right, let's go ahead and get started. The basis of accounting is the chart of accounts. And the chart of accounts is, think of it as the buckets where you keep track of things. So for instance, you'll see the first thing there is the last national bank of any town. It is a bank, it's a cash on hand. So we will take these buckets, this chart of account, and we will categorize them. And I'll talk about that more as we go through here. But you can see that it is literally just a listing. It is a chart of the various accounts with which we do our accounting. So the first thing that we need to know is the first category, which are assets. And assets are things that you own. So in our side of the business, you can think about things like houses, the various houses that you own as rentals or Airbnbs or your flips, your wholesales, whatever it might be. Another example would be a truck that you use for business purposes. So that would be an asset that you own. Things like stocks and bonds also would fall into the asset category. So these are things that you own. The next category are liabilities. And this is what do you owe to someone else. So some examples here, a thing like a mortgage note where you owe a bank or a private lender a mortgage. We also have accounts payable, which are things that we owe people in more the short term. So like our contractors or our material suppliers. So we have accounts payable to them. We may also have credit card balances if you use Home Depot or Lowe's or whoever and put stuff on a credit card. So we need to be able to keep track of that and understand what we owe various individuals and companies. So those are the liabilities. The next piece is income. So this is money that comes into our business. Think of it as things like rent. So every month when the rent comes in, that's income to us. If we sell a property, we also have income at that point. If we receive interest or dividends or royalties or anything else, that comes in as income. The other side of that, of course, is expenses. This is what goes out. This is our mortgage payment. This is the taxes that we owe, the utilities, marketing costs, postage, gasoline, all those various costs of running the business. So those are the expenses. Now, after all of that, we have something called equity. And that is what is left. After we take our income, subtract our expenses, hopefully this is a positive number when we think of it in normal terms, and that is what is left. So in the current year, we call that net income, and in history, that becomes what's called retained earnings. So we have assets and liabilities, and then the equity also sits on the balance sheet. We'll talk more about that in a little bit here. And then we have income and expense, which gets us down to our current year net income. All right. Now, in accounting, you always hear about what are called debits and credits. These two words have no real meaning in and of themselves, but they identify the sides of a transaction. There's an old joke that goes, the debits are on the left, the credits are on the right. And that's how you know that you have a balanced set of books. As for every debit, there has to be an equal credit. And we'll get into that a little bit more as we go through here. In a general sense, and there are exceptions, but in a general sense, a debit is an increase to an asset. So when we put cash in the bank, that's an increase in the asset called cash. Also, when we decrease a liability, that's a debit. So when we pay an accounts payable, that is a decrease in the liability, and that is a debit. A decrease in equity, for instance, when we pay out to the owner some part of the equity, that is a debit. A decrease in income, if we have to do some sort of a refund or something along that line, that is a decrease in income, that is going to be a debit. And anytime we have an increase in expense, that's a debit. We flip to the other side and we look at credits and we see that the opposite is true. So a decrease in an asset. When we pay that accounts payable bill, we reduce the amount of cash that we have. So that's a decrease in that asset. We increase a liability when we put that accounts payable on the books. That increases that liability, and that's a credit. If we increase equity, if you put cash into the company, a paid-in capital, that is an increase in your equity in the company, and that is an increase. That increase in equity is a credit. An increase in income is also a credit. So when we record a sale, that's an increase in income. That's recorded as a credit. And anytime we decrease expenses, that's going to be a credit as well. All right. So let's go ahead and dive into a little bit more what QuickBooks Online is all about. So I'll challenge you here. How many of you can truly answer these questions? How much cash do I have in the bank? What's the value of the properties that I own? What's the mortgage balance on each of those properties? How much did I make or lose on each property last year? What is my net worth today? When I take my assets and my liabilities, what is my net worth today? And how does that compare with my net worth a year ago? And I would challenge you here to set a goal for yourself that you try to increase your net worth by at least 10% a year. Now, you're not going to be able to do that every year, kind of depending on what the market does, et cetera, et cetera. But set that out there as a goal for yourself to increase your net worth by 10% a year. Here's some more questions. How much did I spend on electricity across all my properties? Which residents owe me how much? Now, you may be using a property management software for this particular question, but I also can track that in QuickBooks. How much do I owe each credit card company, the Home Depot bill or my Amex or whatever it might be? How much did I spend to rehab each property? We'll talk a little bit later why that's important. How much do we have in security deposits for each tenant that I have? How much does an average turnover cost? And that's an interesting one when you start looking at those costs, because those can be quite hefty, obviously, as we get into the business further and further. What about these? How much pre-tax profit did I make on each of my rehabs or my wholesale deals or my Airbnb or whatever it might be? How does my pre-tax profit for the company compare to last year? Where did the money come from and what did I do with it? This is a concept of cash flow. How much did I pay an individual contractor and do I need to send them a 1099? Et cetera, et cetera, et cetera. Now, what we find is that, and Vina kind of alluded to this right at the top, is a lot of us tend to just have what we refer to as the shoebox, that you just throw all the receipts in all year long, and then you take that shoebox to your accountant and have them figure out what's going on. Obviously, that's not a very efficient way to do it. It's also an expensive way because they are going to charge you, obviously, to do that. All right. So maybe you think you need an accounting bookkeeping system. I contend that we all do. Now, why would I bother to go through this work of keeping accounting books? First of all, whether you like it or not, each of us is a small business owner. And we'll talk a little bit more about what that means. Another thing is you're going to need to borrow money, right? Either from a bank or from a private lender, whatever your sourcing might be there. Unfortunately, we all have to file tax returns, right? Like that one or not, we have to do it. A big part of this is you need to be able to manage your business. And how are you going to do that if you don't have good numbers? And I know that most of you have no interest whatsoever in accounting. I'm not going to try to make accountants out of you. I'm just going to show you how to use QuickBooks in this case to keep track of your books. So you are a small business owner. And one of the things that you will be asked for from the banks, from any competent private lender, or anyone who you're trying to do money business with, is they're going to want to be able to see your personal financial statements. So they're going to want to see those categories that we just showed you. What's your income? What's your expense? What are your assets? What are your liabilities? What kind of equity do you have in this company? So that's going to be very important to anybody who's going to try to, or where you're going to go to get money. You need to borrow that money. Banks are going to want to see it. Private lenders, if they're competent, are going to be impressed by a good set of financial statements. They understand that you know what you're doing if they can see your books and make sense of them. So that's one thing that's very important. Now, the other thing we talked about is that tax returns need to be filed. I hate taxes as much as anybody, but it is something that we have to do. So a clean set of books, for one thing, is going to help you reduce your tax preparation costs. If you take this QuickBooks file and send it to your tax preparer, they will be able to go in there and just do the taxes instead of have to first do all the bookkeeping. So you're going to save a lot of money on that front. The other thing is that the clean set of books is also going to enable your tax accountant to properly file your return and therefore minimize your taxes. Right? If they can go in there and see how you look at things, they can go ahead and turn that into the tax return very efficiently. Now, here's another big one about why bother, and this is a true story. Several years ago, one of our Cincinnati RIA members hired me to help them set up their QuickBooks. They had an incredible set of manual books, literally paper ledgers. And she had done an absolutely incredible job of that. She took those to her tax preparer, who prepared her taxes and sent them in. And then the next year, I was helping her set up her QuickBooks. She took the time to go back and input an entire year's worth of transactions, every single one for the prior year. When she got that all done, we sat down to look at them, and I did something that she did not have the ability to do with manual books, and that is to run reports. So we started running various reports, and one of them that we ran was the profit and loss statement. And when we went through the profit and loss statement, we found out that she had actually overpaid her tax bill by $40,000 because her tax preparer had not taken what's called a cost of goods sold. So anytime when you sell something, you're allowed to deduct the costs of that. So she was a big wholesaler at that point. She had wholesale without the costs of the properties that she was flipping. So her taxable income was reported as way too high. So she overpaid by $40,000. Now she was able to file an amended return and got that $40,000 back. But you can see how important that can be to have good books to turn over to your tax preparer. Another side of this is that you need to manage your business. So you need to know where you stand. You need to be able to identify trends. You need to understand profitability by segment. And that's a loop, right? The better I understand my business, the better I can make adjustments to it. So identify trends. For instance, what if your water bill on a particular property starts ratcheting up, right? Wow, I might have a problem with either my tenant is wasting water, or maybe I have a leak. So I at least know to go look at something like that. So again, by analyzing our statements, we can get tighter and tighter on this loop of managing our business. So again, I'll contend that that's a very important thing to have. Now, there are a few different approaches to bookkeeping. We talked about the one that's a shoebox approach, where you just throw everything in the shoebox and you take it to your tax preparer at the end of the year. The second one is the manual ledgers approach, like the gal that I just talked about. Wonderful manual ledgers, but again, no way to really look at the data. The third way is the do-it-myself approach, which many of us start out doing. And I would assume that that's why a lot of you are here tonight. And the next one is the hired bookkeeper approach. And this is the other one that you seriously should consider, especially as you get a little bit bigger. Hire somebody to do what they do best, right? You are not an accountant. I doubt there are more than a half a dozen accountants on here tonight, and the rest of you are not accountants. So hiring a bookkeeper and showing them this system. I have had over the years many people bring their bookkeeper to this class to understand how to account for real estate in QuickBooks. Let's dig deeper, a little bit deeper into the concepts. There's this concept of dual entry accounting systems. Accounting was actually developed in the, I can never say this word, Mesopotamia district, which I believe is in Old Egypt, for tracking trades on literally on clay tablets. And then in 1494, a guy by the name of Luca Pacioli wrote down and defined the dual entry accounting system. And believe it or not, it is still those exact same principles that he laid out in 1494 that we use in today's accounting system. So he was way ahead of his time. The next concept is this chart of accounts. We talked about that a little bit earlier. Remember that it's made up of assets, liabilities, and equity on what we call the balance sheet. So we have assets, we have liabilities, and then our equity in that company. The other side of that is the income and expenses, which is called the income statement, or the profit and loss statement is the other way that you'll hear that talked about. And P&L is kind of a shorthand way that we talk about that in the accounting world. Now, one of the nice things about QuickBooks is that it operates on familiar transactions. Over the years, we've all done things like enter a bill or at least track a bill. We've paid that bill. We might have written a check to pay that bill or written a check directly to someone. On the other side, we might have created an invoice, received the payment, and made a deposit. So those are all concepts that are handled within QuickBooks so that it's familiar to all of us with things that we have always been doing. Now, there's a home navigation screen within QuickBooks. So you actually can come in and click on any of these icons here, and it'll take you to that particular function within the system. So this is kind of a nice visual overview of where you can go. Now, one of the most important things about QuickBooks, as opposed to virtually any other accounting system that is out there, is a concept called classes. And what classes do is they help us properly account for properties when we're talking about real estate. So a class might be 123 Easy Street. So we know what our electric bill is for 123 Easy Street. We know what our mortgage payment for Easy Street, et cetera, et cetera, et cetera. So it helps us properly account for these properties. And then it also allows us to do what I call multi-dimensional reporting. So we can get that property report for 123 Easy Street, or I can look across all of my properties for instance, electric expense or water expense or whatever it might be that I'm interested in tracking down. So I can do it, vertically or horizontally, slice and dice really any way I need to. So that's a very important aspect of QuickBooks. The other thing that allows me to do is what I call hierarchical reporting. Start at the property level. I might have several properties, for instance, in my rental portfolio. I can roll those up to rentals. I might also be running a wholesale business in the same set of books. I can keep track of the various Airbnbs that I have and a total for that. And then I can go up levels and levels and look all the way up to my entire company at how I'm doing. Conversely, that gives me also the ability to drill back down. So that's a very important aspect of the reporting capabilities that are allowed by having classes. So let's real quick walk through. Let's say we want to buy a house to rehab. So the first thing we do is we go into the chart of accounts. We create an asset for that property, 123 Easy Street. I know I'm going to have a mortgage on that, so I'll establish my mortgage account. which is a liability because I owe money to the person who loaned me that money. I then borrow the money from that private lender, and I'm going to make a deposit into my books, and I record the HUD-1 when I buy that property. So that's kind of the four basic steps that I do. I establish the asset, the liability, the deposit, and then I write the check. So at that point, that house is now on my books. The next thing I'm going to need to do is record the expenses for the rehab. So there are several different ways I can do this. First one, I can go out and write a check. So I go out on site and I pay the roofer when he's done. Go ahead and just write him a check on site and then go back to the office and record that check. The next thing is I might have bills that come in, your utility bills, for instance. They come in, I can enter those bills into the system today, even though they might not be due for 2 weeks or whatever, and then I can go ahead and pay those vendors. All that's going to get collated into the expenses for that particular rehab. Now, usually there's one of two things that I'm going to do. I'm going to either turn that into a retail sale or I'm going to keep that particular property as a rental. So let's talk about the differences there. If we sell the rehab as a retail, we take all of those costs, all the acquisition costs, the rehab costs, and all the holding costs, and that all becomes part of the cost of goods sold. Remember, I talked earlier about the gal whose accountant had not actually accounted for those. So you've got the sale price of the house, then the cost of goods off of that for the taxable amount under that. This is a concept, or we use the deposit screen to from the HUD-1 of the sale to record all that. Now, the next thing we could do is turn this into a rental. So at that point, we would take all the acquisition costs, the rehab costs, and the holding costs, go to what's called the basis in that property. So if you ever hear anyone ask, what's your basis in that property? That's what I paid for it, what it cost me to rehab it and hold it until I went ahead and put it into service. We do this via journal entry. So we've accumulated all these costs. We then just move that whole chunk into the basis of that property. The underlying accounting principle is that all those costs until the time we put a property into service. And that is when I advertise it for rent, that's when I am putting it into service. All those are considered the basis, and your tax preparer then uses that basis for determining the depreciation on that particular rental property. All right, so now we've taken this, we've converted it into a rental property. The next thing we need to do is be able to record the expenses. So we have things like the mortgage payment, right? Every month I make the mortgage payment on that particular property. I also have just your basic bills that come in, the utility bills, the taxes, and all that kind of stuff, the recurring charges through the years. And then once in a while, hopefully not too often, I have repairs and maintenance, right? I may have to, 5 years in, I may have to put a new roof on or whatever it might be. So I need to be able to account for the various things that come through. So again, I can use that, do that any of those ways we talked about, writing a check or through the bills. After we've done all this, then we get into the reporting, which we've talked about a little bit. So some of the basic reports that we get out of the system are the balance sheet, which again show us all of our assets, all of our liabilities, and the equity that we have. It also has a report for the unpaid bills. This is your accounts payable. So bills that I've put into the system, things that I owe that have not yet been paid. So at month end, I can run and see what is my unpaid bill balance. The profit and loss statement, the income statement that we talked about before, which is all my income, all my expenses, and my net income for the month, for the year, quarter, however I want to look at that. I can also run property reports, which is a profit and loss statement by class. So that's again how I can look at 123 Easy Street and see the report on just that particular property. I also can see my customer balances. What do my tenants owe me? So the accounts receivable. So that's what we're looking at there. All right. So have I convinced you that maybe you need an accounting system? We had all these questions that we thought we would need to be able to answer that we talked about earlier on. All right. So we've got all these questions we need to be able to answer. And what we will do is we're on February the 14th, Valentine's Day of all days. We're going to do the all day seminar. Start at 9. We should be done about 3. So in the morning, we will go into the definitive real estate investor's guide to QuickBooks Online. I'll give you a little bit more of a agenda here in a minute. And then the afternoon, we'll do more of a hands-on workshop. So we want you to have your QuickBooks available. We will actually go in and enter some things, and I will ask you to bring your specific challenges and questions that you have about trying to implement your QuickBooks in your situation. And between Anera and I, we can probably help you figure out how to do that. We've done quite a bit of that over the years. All right, so in the morning, we'll go through things like accounting concepts in a little bit more detail than we did this morning, or this evening, I mean. We'll go through setting up your company file. How do you enter your company information into the system so you can do things like send 1099s or send this off to your tax accountant and they have all the information that they need to file your taxes from that side. We will talk about setting up the chart of accounts. We will actually exercise the chart of accounts. We'll add some accounts as we walk through various scenarios. We'll do some basic transactions. We'll do checks. We'll do deposits. We'll set up some bills. We'll talk about a concept called memorized transactions. For instance, your mortgage. You don't want to have to enter your mortgage from scratch every month. You can set up what are called memorized transaction, and it'll just happen every month. We'll go through the purchase and the sale of a house. We'll talk about reconciliations. To me, reconciliations are one of the most important things that we can do in accounting because that means that I have accounted for every dollar. Now, it might not be in the right account, but I am sure that I have accounted for every dollar that's flowed through my business. And then we'll get into some reporting. We'll do the balance sheet, the income statement, comparative statements. I didn't talk about that earlier, but where I can compare this year to last year, this month to last month, any way I want to look at that. So that's some really powerful stuff there. In the afternoon, we'll get into the specific questions you have. We'll get deeper into the reporting capabilities using the filters, what to include, exclude, all that kind of thing. We'll exercise the system with specific scenarios and then whatever you need help with. So, if you've got some weird situation in your business that you're not sure how to do, we'll help you walk through and figure out how to do that. So the online course is Saturday, the 14th of February 14th, online 9 to 3. Now, you can register to just come to the Saturday. If you're a RIA member of any of our groups, that's $47. If we have any non-members on here tonight, it's $97. If you are an Express Success member, you get to come to this for free. If you are a non-member, go to your group's website, or if you don't belong to a group, go to whatever group you signed up for this session, and they will be able to register you for the Saturday. Now, I strongly, strongly, strongly encourage you to consider tonight going ahead and buying the home study course. It's only $297. You can get it at this link here, rmgworkshops.com/QB guide. If you want to take a screenshot of that or jot it down real quick. I do also have QuickBooks Desktop Home Study course on that same link. So either one of those, you can go ahead and purchase through that link. And if you buy it tonight or actually anytime before the 14th, you will also get the Saturday session included. So save yourself $47 or $97 by going ahead and buying the home study course tonight. Here's the table of contents. This course is, I believe it's 217 pages long. It is very detailed. It walks through all these things about how to set all this stuff up, how to use it. It talks a little bit about the accounting theory behind some things that are not quite so obvious. But again, by just following through this and doing what the system calls for, you're going to send over to your tax accountant a strong set of books for doing your taxes, and you're going to be able to run good reports for yourself to understand how the business is doing. So again, this is a front to back course on using QuickBooks Online. Now, if you don't have QuickBooks, I half kidding, don't come to this class because you're going to be lost. If you don't have it in front of you and be able to walk through some of the things as we're doing it. So if you don't have QuickBooks Online, you can go to this link right down here. This one, quickbooks.intuit.com/pricing. Now you want to get at least there are four versions of QuickBooks Online. You want to get Plus or Advanced. You would get Advanced if you have 40 or more classes, and just think of how many properties do you have. If you have under about 35 properties, you're going to be, you're okay to go with Plus. If you have more than that, you are going to need Pro to have the additional classes. So make sure you get the Plus or the Advanced. Again, I mentioned that I do have the same course, but for QuickBooks Desktop. It's the same functionality in both systems. It's just that the navigation is completely different. So you are more than welcome to sit through with us on the 14th and watch how it works in online. If you buy the desktop version, and by the way, you cannot go out and buy supported desktop at this point, but if you have it from the past, keep using it. I mean, I do myself as well. I'm running actually both types at this point. So when you buy the desktop version, there's also the Saturday session recorded from the last time that I did the desktop version. So you've got that in your pocket as well. So again, desktop version, same price, same link. All right. So you can just go in and grab that. So with that, let's go ahead and open
Back
it
up
up.
a slide, Jerry. Leave that slide up because people were asking
Okay.
about it.
All right.
Yeah, so just let me say again before we go to the questions. If you get the home study course, you do not then also have to sign up for Saturday. We'll
Correct.
just sign you up for Saturday. And we don't care what
Right.
group you're from, we will sign you up for Saturday. If you
Right.
would just want to sign up for Saturday, go to whatever group you came here from. I mean, if you're not a member of one of these groups, you still got the link from one of them and sign up there for 47 if you're a member, 97 if you're a non-member.
All
Okay,
right.
now who has questions?
Anera was monitoring chat. I don't know if we have had questions through there, Anera.
There was one in here about, all right, this is a little more of a tax question. My partner and I flip houses. We have a partnership LLC. I get cash from my LLC for my rentals, and he gets cash from his LLC for his rentals. We buy our flips and renovate them using our own cash. Can we use the cash from our individual LLCs to fund the purchase and renovation costs of, I think what I'm hearing is the houses that this third LLC that we both own flips?
Okay. Yes. You're getting into some more advanced accounting when you do that. What then you're looking at is what's the percentage ownership of the LLC. So to make it easy, one of you puts 40% in, the other one puts 60% in. All the incoming expenses gets divided 40-60. Your tax accountant is going to take your LLC return and provide you with what's called a K1, which is your portion of that particular LLC's activities.
Yeah, I think you guys maybe ought to be retaining some money in that LLC to do the next flip so you're not constantly having to add your own cash back into it. But it's
All right, let me make a distinction right here. It come up on Saturday for sure, but there is a huge difference between tax profitability and distributions. They are not the same. Okay. You can have cash that's left in the business, even though you've paid taxes on it. You can pay taxes or have very low taxes and take a lot of money out. So they are not the same. They are two very distinct things. The taxes are based on the legitimate income and expenses, and the distributions is what you choose to take out or put in to the business. So that's your equity in the LLC.
I do have another question, but as far as that, doesn't it matter if the LLC is a pass-through or if it's a, oh, I can't remember the other type of LLC. But if it's a pass-through, then you don't actually do a K1, that kind of thing.
Well, if it's passed through, that's um, usually that's a sole proprietor type of LLC as opposed to a true partnership LLC. I think that's what
Right.
you're getting at.
Yes. Yeah.
Yeah. So at that point, it's you, right? All the way up and down. It's
It's
just
just
that you're
tax liability, or it's just liability protection, asset protection type thing.
yes, yes, you get in all those aspects at that point.
Yeah.
That's true. Yeah.
My other question I had is that I have HubDoc connected to QuickBooks Online, and it funnels receipts, invoices, does it. So it's a catch for accounts payable, it's a catch for receipts, information, that kind of stuff. Is there a suggestion or something you use to help funnel document flow?
Um, I have not. The only thing that I'm doing is the bank integration. So, all the transactions from the bank come in, and then credit cards, the same thing. Bring in all the credit card information and sort that out into the appropriate accounts and classes.
Well, and this is where QuickBooks gets you, because everything that you're going to use in real estate is more likely to integrate with QuickBooks than anything else. Property management software, note management software, all that stuff is way more likely to connect to only QuickBooks than to anything else.
Yeah. They really are the 600-pound gorilla in this space. They
And
are.
that's what I find as for using receipts reception for QuickBooks Online is that it's pretty difficult to use that, and all of a sudden, poof, it's gone. And so just having an extra where you send receipts, invoices, everything to something else is extremely helpful because it backs up my data. It puts it in Google Drive, it puts it in Box or wherever you want to do it. But I just didn't know if you've known of any other software besides HubDoc. I love HubDoc, but I was just wondering if there's something better.
Not that I am aware of.
Okay,
Yeah.
thank you.
Okay, other
Sure.
questions. I think Neris picked up most of the accounting questions in the chat.
Okay. All right. That's a great thing about having another CPA online. All right.
We're,
Kadya, is that how you say that? Unmute, Kadya.
oh, Acadia, is
Oh,
it?
sorry. I didn't. Okay. I thought you said
Arcadia.
Anken. No, 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 it's okay. No, it was just a comment on that. I think, well, I'm hoping anyway that this is really true, but I am using another software called REI Hub. It's a simplified version, but it is built for small real estate investors. But it does connect to the banks, so it allows the bank fees, and I think it's because they're using Plaid. So I think
Mhm.
Plaid has become an intermediary to help to make those connections. So I'm hoping based on that's an indication that QuickBooks doesn't have as much of a stronghold as we think it does. So it might be still worth investigating some alternatives, but it is obviously still the gold standard. But yeah.
Yeah. And I'm not
Great.
familiar with that particular one. What I find usually is a lot of those intermediaries don't have the functionality, especially in reporting. So yes, it might be able to pass it through, and as if it can pass through cleanly into QuickBooks, then I can do everything I want within QuickBooks. But a lot of them, like what I find particular, say for the tenant management software, they usually have very poor accounting. They do a great job front end, interfacing with your tenants and so forth, but the back ends are usually very weak, which is why everybody I know is still coming all the way back to QuickBooks to actually do their reporting.
Somebody asked what that link was to get the 50% off the first month
Hold on, let me
version.
back up. Let me back up to that one. Where is
Oh,
that?
you just passed it.
Did I? No, that's the table of
Yeah,
content.
it's the one that starts with "Don't come if."
Well, let's see. There it is. Okay, sorry about that. All right, so right there in the middle of the page.
QuickBooks.intuit.com/pricing.
Right. And again, make sure that you get either the plus or the advanced version, because those are the ones that have classes. And as I hope I helped you understand, classes are a very important part of this for all the reporting. Other questions?
All right. Yeah, other questions. Oh, there's been a couple of questions about bookkeepers and what they cost and whatnot. And I just want to point out that the reason Jerry had to come in and fix all my books was because I kept hiring very qualified, experienced bookkeepers, and real estate bookkeeping is just different than like
Right.
even like I got that big old giant ass QuickBooks manual that they used to print when it was a desktop version, and I tried to set up my chart of accounts and whatnot, and it says like it's very basic for real estate. And when you get into stuff like I have a land contract, I have a note, I spent money on an option, like there's no information
Right.
about any of that. So I had books that like the bills were getting paid and the invoices were being input and the checks were going out and stuff like that. But the because it was set up wrong, trying to send it off to the CPA and say, okay, tell me how much I have to pay in taxes wasn't they were kind of like making stuff up almost like because they didn't know what to do because they weren't trained on it either. So
Right.
if you're going to
So
hire a
like I
bookkeeper,
mentioned earlier, a lot of people who are the investor, right, will bring their bookkeeper to the class and give them the manual so that, when they're recording the purchase of a house, here's how you do it so that the books are square, right, when you go ahead and turn them over. So I think, that's a way if you're not the one that's going to be doing the books, make sure whoever is doing them correctly.
yeah, or you set it up and then turn it over to them and show them how to do it correctly.
Yeah.
And remember, Jerry, we're recording the Saturday class, and everybody who registers gets the recording anyway.
Yep.
Because most people need it. This is the third time we've done this in 5 years, and people are always like, I need to watch that part again. I caught every part, but that one part right there, I've got to watch it again.
Yeah. Yep. All right, Deborah.
Good evening. My question is, I have QuickBooks set up that we've used for years, and I'm trying to determine, like under rental property, under expenses, how broken out do those categories really need to be? Like I have some that just say like landscaping or plumbing, or like, should it be more broken out? Is it my personal decision? Do I need to have that conversation with my accountant as to what he's doing with those numbers, or what do you recommend?
Can I answer this one?
Go ahead.
The only reason I say that is because I just was on a John Heyer webinar where John Heyer answered this one. So I'm
Okay.
going to give his answer, which is the more you break it down, the better, because then you have smaller numbers on your tax return for the IRS. So instead of one big maintenance thing of $50,000, you have plumbing of $580 and lumber of $2,012. This is how I have done my taxes for all of my clients and how I was taught to do it 30 some years ago. So that's my recommendation. But technically, no, you don't have to break it down that far.
I was going to say break it down to whatever level you will actually pay attention to it and track it. So I used the example earlier about, I might have a water leak. Well, if all you're tracking is utilities, you might not know that water is your issue, right? So at what level are you going to actually pay attention and potentially dig down? So that's where I was going to go with it. I don't disagree with John's answer, but that's where I was going to go with it.
Follow-up question.
Yeah.
If after 20 years of recording and doing this, you would like to then go change how it is broken down, is that a possibility? How big of a nightmare is that? Can I go do that and add in some more divisions in my maintenance category?
You absolutely can add as many as you want. You would have to actually go back and recategorize transactions if you want to do history that way.
Okay.
Now going the other way, you can merge accounts very easily, and then it takes all the transactions and puts them into that new merged account.
Okay.
So
Thanks.
yeah, going that way is a lot easier. All right, Alicia. You're still muted, Alicia. Usually upper right corner, a little click box. And now she's frozen.
Oh no. Okay.
There you go.
Oh, there we go. Okay, sorry. You hear me now?
Yes, yes.
Okay, so I am a part owner in our family. I'm a fourth generation mobile home park. I guess owner. I have a K1. So we're trying to now acquire RV parks. And so I'm learning the business. My dad's the one that runs the mobile home park, but does it make sense? Like we want to start acquiring a few of them, but does it make sense in the beginning to do all the bookkeeping at first, or does it make sense to hire that out, like time? And I'm just curious, like, what do you typically see in the industry?
Um, Again, are you adept at it? If you're adept at it, it's easy enough for you to do it. The same point we were talking about a few minutes ago is if it's not your thing, hire somebody to do it for you, but explain, make sure they understand how to do it the way you want to see it.
Okay.
I'm sorry, can I give the control freak answer?
Yes.
Yeah,
Yes.
go ahead.
Yes,
Go ahead.
that might be for me too.
I
Please.
don't know how you would know whether the numbers you're looking at are correct if you hadn't done them yourself for a year.
Yeah. Yeah, that makes sense to me too.
Yeah.
Just so that you know that people are being honest and just from a business running standpoint. So,
Yeah, and also like a year of you doing it starts to let you understand like costs and seasonal trends and whatnot. So if you hand it off and you're just getting reports next year, you can go, whoa, 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 this looks off from what we did last May. Let me go check. And you wouldn't even have that thought necessarily if somebody else was doing it right from the beginning, but that is the control freak answer.
right. That makes a lot of sense. Thank you.
Jerry,
Yeah,
this is Steve Feldman. May I pose a question?
sure.
Okay, thank you. I've been flipping properties in New Jersey for the last 35 years. I restarted a couple of years ago after COVID. I'm doing maybe 3 or 4 a year right now. And I'm doing, I wouldn't say the shoebox, but pretty close to it. But I keep receipts. Everything's pretty good that way. However, I was just about to get started with a friend of mine on an Excel program to start bookkeeping. And I think what you're talking about tonight, you and Vina and Anera, it probably makes a lot more sense for me to get QuickBooks because I'm not only looking at increasing the flipping capacity, but I'm looking for a triple net or an apartment complex in the next year. So my question, I'd like to sign up for the February 14th I don't have QuickBooks at all in my life. How shall I start? What might it cost me to get the program you're recommending and have it by the 14th so I could be in the loop and know what you're talking about?
Mhm. Okay, so this link that's in the middle of the page, when you go in and sign up, you have immediate access to the program. So you can go in and start poking around and getting used to it that way. If you go ahead and buy the course tonight, that gets delivered probably tomorrow electronically, and you can start going through the course so that on the 14th you have some background, you can ask some specific questions, that sort of thing. So I I cringe at trying to think of doing proper accounting on Excel spreadsheets because you can screw those up easily, right? And there is no, we talked earlier about dual-sided entries, right? In
Yes.
QuickBooks, you cannot have an unbalanced entry. It will not allow you to do that.
Okay.
Whereas in Excel, I can screw up a formula and boom, I've created a big problem. So I would encourage you not to do an Excel version of accounting, especially it sounds like you're doing enough volume and complexity that you really don't want to do that.
So follow up very briefly. By signing up and getting access to one of the programs, will I have the ability to keep the program beyond the course? Will I have access to a QuickBooks app or program after the course on the 14th?
Okay, QuickBooks Online is and I get nothing from Intuit. So understand that.
Okay.
They are a monthly subscription.
Okay.
So, you sign up and it is a monthly subscription. I don't make a penny off of it. So, I could care less from that perspective. It's just that it is the best thing out there at this point in time, as far as I know.
Can it be purchased outright?
No, not anymore.
No, it has to be a monthly subscription period.
Yeah. And
Okay.
it's either monthly subscription for online. If you happen to have already had desktop, it's an annual subscription cost for desktop, but you cannot buy desktop new at this point.
Okay. Thank you. Thank you very much.
Sure.
All right,
Lewis, whoop,
we've got a whole
got one
bunch
up
of,
there.
if I have QuickBook Express, will I be lost in the class? If I have QuickBooks, there was something else that I didn't. It just disappeared because somebody else asked a question. If I have QuickBooks Simple Start, will that work? Yeah, I think you've been pretty clear that it needs to be Plus or Advanced Pro for the class.
Yeah. Anera, have you worked with either of those other ones?
I
I have not.
have. I think for the class, just to be able to kind of get the concepts of it, it's probably fine. To run any kind of rental business, no, you're probably not going to be able to use those. You're going to have to upgrade.
Okay, thank you. All right. I had a hand there and I lost it.
Yeah, it was me. Hi, Jerry. Hey, Vina. Quick question. I was not aware that you would be offering the study guide plus the class for the 297, and I paid for the class already, but I'd like to get the study guide.
Yeah, sorry. No, I'm kidding, Lewis. I answered you that. We'll just refund your $47.
Right.
Oh, okay. All
Yeah,
right.
that's why I
Because you are
asked
doing it
which
before the
RIA
class.
he was in. Is this only Korean and RIA GC?
I think I signed up through Corey, I believe.
Yeah, he's
Okay.
he's a co member. He's from New York.
Okay, then that should be fine.
Okay. All right. Thank you.
All right. You said there were some questions in chat still?
I had one. Yeah. Do you recommend investing in QuickBooks if you're new to all of this? You don't really know the terminologies. You only have one duplex, but haven't done any profit or expense tracking.
Yes, I would recommend start from the front, because going back and trying to enter transactions from 2 years ago and that kind of stuff is a real pain. So start now, learn how to do it, and then as you grow, it'll be much, much, much easier.
I have another question, which maybe Vina can answer, that the pitch is not on the RMG website. So if people want to do this tomorrow and pay the extra money, where can they go to do that?
They can go to rmgworkshops.com/QB guide. I went there today and it was there. So unless something broke, it should still be there.
That'll be there until, I don't know, we'll probably leave it up for a week or so that people can do it before. And it's not like you're not going to be able to buy it at the Saturday. It's just you're going to have spent an extra $50 or $100 to do that.
Right. Okay. Katie or Katia, however you say it again.
That's okay. It's Kadia. Question for you. Does it, especially if you're in the newer stage, does it matter if you're using cash basis versus the accrual accounting basis where you're less worried about like balance sheet?
Okay. You are still going to do a full accounting, which is going to be all 5 of those categories: asset, liabilities, income, expense, and equity. The difference is how your tax return gets filed. And almost all of us are going to be on the cash basis. It'll be very unusual, and for some very specific person or purpose, that you would be on accrual accounting. Does that make sense? Accrual accounting and cash accounting in QuickBooks is simply a toggle switch of which way do you want to report. And almost all of us are, for tax purposes, are reporting on a cash basis.
Okay. So, but is it, but in terms of the balance sheet, because we're not, for tax purposes, reporting the balance sheet, I guess my question is, how critical is it to make sure that you're crossing all the dots? What is it? Crossing, I'm sorry, crossing all the T's and dotting all the I's and reconciling, etc.
Absolutely, you want to still do that. And, for one thing, reconciliations you need to do just to make sure that, everything is accounted for some way or another. The other thing about your balance sheet is that when you go to like apply for a loan, they will ask for that stuff.
Okay.
A private lender who's worth their salt is going to ask for that kind of information. So it's much better to have it and not need it than having to scramble to try to figure it out. So,
but in terms of the balance sheet, what are they looking for though? Is it more of looking to see the value of your properties, with or without depreciation? Like, what are they looking for?
Well, the lenders are going to be looking at things like your debt to asset ratio, your debt coverage service ratio, those sorts of things, which they can pull from your income statements and your balance sheet.
Okay, so, got it. Okay.
That's why we want to have that stuff available to us.
That makes sense. Okay, thank you.
Yep. All right, Christy.
Hey there. So my question is around using the QuickBooks Desktop Pro software. So I've been using it for 20 years to run my husband's business, which is not real estate. He is a sole proprietor in financial sector. So I'm pretty proficient with it, and I know how to run reports, but it's no longer supported, and I'm holding on to it and the old laptop until I can. Now I'm getting into real estate and I have one rental property and I'm about to get started and set up a new company file on it. How long could I run my business on QuickBooks Desktop Pro if I don't care about, I don't need to integrate with online banking or anything like that. I don't have that many transactions. I don't mind entering things manually, reconciling manually. How much longer do you think I could reasonably run on Desktop Pro?
As long as you can stand it. I about 80% of everything I do is still desktop because I grew up on that too. I'm probably 30 years in desktop. So I grew up on that. I understand that much better. So as long as they allow me to, I will continue to use desktop for certain things. So yeah, kind of as long as you can get away with it.
Okay,
And it
thank
sounds
you
like
very
you
much.
understand about just setting up a new instance for your new company.
Yeah, exactly. I had a company before. I owned a business before, so this would be just
Okay.
like a new company file, and I could just share it with my accountant. And I'm pretty sure that they are in the same boat. They still probably using, they still
Yeah.
have the old company files and the old QuickBooks versions where they could look at the
Yep.
accounting. And yeah,
Yep.
thank you. Appreciate it.
Okay. All right. Dino, how you been?
Oh, hey, Jerry. Thank you. Actually, Christy asked the exact question I was going to ask you because I have the old desktop one and I have your old desktop manual, and I've been using that and doing it. Wanted to know if I could continue doing it. You just gave the answer, so I'm good. So
Yep.
thank
All
you.
right. All
Happy
right.
New Year,
Good.
buddy.
You too. All right. I don't know what L stands for, but hello. Ms. Kern.
Oh, hi. I am an old Intuit employee and I used to know QuickBooks quite well. So I was able to adapt it for real estate at one point. Since then, I've quit doing my accounting and turned it over to many bookkeepers who absolutely have not a clue as to how to use it. And my books for several years are a mess. So I am out of state. I'm in Arizona. I don't know. I'm not really clear if this session that you're offering is for totally online and how long do I own it if I buy it?
Yeah, it is an online class, and is Venus still on here? As far as I know, you have access to the recording of this class, of the class forever, as far as I know.
Okay,
As
and
far as my home study course, you own that outright. Yeah.
okay. So, but the session as well is going to be recorded and I should be able to access it.
Yeah, the Saturday, the 14th, yes.
Okay, so I'm no longer doing acquiring any more rental properties, although I have quite a few. What I am interested in is how to set up private lending within QuickBooks. Is that pretty simple?
Actually, and I forgot to mention this, there is a bonus chapter that comes with it, which is accounting for investments. So that is actually a bonus chapter that I wrote a couple years ago
Okay.
as a supplement. Yep.
And if I don't sign up for it tonight, it's costing an extra $50. Is that what I
If,
heard?
if you wait until the Saturday to buy the home study course, you will have already paid the $47 to be at Saturday, and it will cost you $297 then. So you save the $47 if you buy it tonight.
Tonight, but I have to go to the RIA website to find it to.
This rmgworkshops.com/QB guide, and that's actually anytime before the 14th.
Oh, okay.
We will honor the 297 to include the Saturday. Yeah.
Okay. Thank you.
All right. Anera, any more?
I don't think so.
Can I ask one more? Sorry, just about the class. So with the
Sure.
class, um, so what we're basically getting the all day Saturday with the Zoom, and then this, do we have let's see, um the home study course, is that like a book or is it all just online stuff?
It is all it's delivered digitally, but it's a 217 page manual.
Okay,
That's
do we get a physical with it?
no, no. You
Okay,
can
is there
print
an
it out if
option?
you'd like.
Okay, there's
Yeah.
no option to buy a physical on top of that or anything?
No, I haven't printed this for many years at this point. Yeah.
Okay,
Yeah.
all right. Do people do that or do they just mostly do the online?
Yes. I personally, a lot of the courses that I get, I will go ahead and print a physical copy because I will highlight and put notes in it and all that kind of stuff. So,
Okay.
dog ear it, so
Okay.
yeah, yeah.
Okay, great.
Dino.
Hey Jerry, quick question. You just mentioned you wrote a bonus chapter on investments for your home study course for the online. I have
Yeah.
the desktop one that I bought several years ago. Is it also in that? Or if not, can we get that?
It did I write it for that one? I think I only wrote that one for the online version. Now, if you know desktop well enough, you could, translate it. It's just different, screen names. You know how that is. So all the concepts are exactly the same. It's just the screenshots and all that kind of stuff, would be different. But yeah, we should be able to get you that bonus chapter. I think you I think you have my email, don't you?
I'm not sure that I do. I will check. Is it on the home study course? If it is, and I
It
got
should
it.
be. Yeah, it should be. Yeah. Yep.
If not, I'll reach out to you otherwise.
All
That's
right.
fine.
All right. Good enough. Good enough. Yep.
Thank you, Jerry.
Sure.
Jerry, I do have a question about there's QuickBooks Online has been going through a lot of changes. And so how up to date are your screenshots? When was the last time that was updated?
It's funny. And Aaron and I were talking about this 2 hours ago. Um, it seems like they change every day. So the very first thing in the home study manual talks about how they change so often. All the concepts are exactly the same. The navigation might be a little bit different because I can't possibly keep it up to date with all the changes that they make.
That'd
But
be
all of
impossible.
the concepts are, 100% valid.
Yeah. And
Make
what about
sense?
the different, yes. And if you've got different versions, what version are you documenting in the book? In other words, are you using the plus version? Are you using a
Yes.
different version to use? Are you, does that make sense?
And Aaron, do you remember, did we use Plus, I think, didn't we? When
On
we
which one?
when we did the screenshots for my manual, I think I was using
Yes,
Plus.
we were using Plus. Yeah.
Yeah.
Yeah. We had a request if you could go back a slide to what everything is included in the course.
That one?
Yeah, I think so. Thank you. And do you know, Jerry, is this being recorded tonight
Yes.
and it's going to be sent to everyone?
I I believe this goes to everyone who registered for tonight will get this. Yes.
Okay.
It will not go to everyone. If somebody goes to their calendar and
Right.
click and then you can see down at the bottom chat. If there's a doc, if you click on it, it'll give you a link to watch the video.
Correct.
Thank you.
Correct.
Yeah.
Yep. It's in the calendar. That's correct. All right. Anything else? All right. Again, I strongly
Jerry,
encourage
I'm sorry.
everybody.
Jerry,
Yeah,
there
go
was
ahead.
I don't know if you caught it. There was one more question in the chat about whether it covers note investing. I think I just lost it. Something else posted.
Yeah, I posted because
Oh, okay.
yes, it's in the bonus chapter, right?
Okay,
And
sorry.
everyone is getting the investing chapter.
Right. Right.
Yeah.
All right. So again, I strongly encourage everybody to go ahead and get the home study course tonight. Save yourself a little bit of money. Start looking through it to see what other questions and so forth we're going to have for Saturday. It makes for a lot more interesting Saturday if you guys have, some scenarios and stuff that you want to run through. So with
Jerry,
that, we will. Yeah.
Jerry, I do have one question.
Sure.
If we can get the desktop version of QuickBooks, how would that be updated with new features going forward?
And there I think will back me up on this. What they are adding now doesn't really affect us, as far as QuickBooks desktop. They are not really what I would call enhancing it. They make a few little changes here and there, but it's not really stuff that we use. Like they've done a lot of stuff with inventory, which we just don't even use within QuickBooks. As far as the true accounting stuff that we do, I don't think they've added anything in quite a while. So I wouldn't be too concerned about that side.
So if one can get the desktop version, would you recommend? And if you do recommend, which uh, year would you recommend?
Well, I'd recommend 26, but I don't think you can get that. Um, get the newest one that you can, and you want to make sure that you get the Pro version because that's the one that has all the classes and everything. Like I talked about how we use that so extensively in reporting, and it's the Pro and above that have the classes. Now, you still could buy Enterprise, but most of us are not big enough to have any real business getting into Enterprise because it's what is it, over $3,000 a year now, I think, an era for
Yes.
yeah, Enterprise.
Yeah.
Yeah. So
Yeah, maybe 2,000, but it's a lot.
yeah, it's more than, I mean, unless you have a big company that you're running, you probably don't need it. It just, expense that you don't need to do.
Jerry, I can tell you as a previous Intuit employee,
Yeah.
they are desperately trying to phase out desktop.
I know that. I hate it. Absolutely hate it, but I know that that's what's coming. Yes.
They just
Yeah.
can't manage working on both and keeping them both to be effective.
I do understand that. Yeah. Don't like it, but I understand it.
I don't like it either.
Yeah. Yeah. All right. Well, I hope to see each and every one of you on the 14th, and we'll dig deeper and deeper into QuickBooks Online.
Thank you
So
so
thanks
much.
everybody for hopping on, and have a great evening.
Thank you.
Good night, everybody.
Thanks.
Thank you, Jerry.
Bye.
Thank you very much.
Have a good night. Thanks, Anera.
Thanks.